The solar tax credit, officially called the Federal Investment Tax Credit, ITC, is a financial incentive that allows homeowners and businesses in the U.S. to reduce their federal income tax by a percentage of the cost of installing a solar energy system. It's one of the most significant incentives for going solar, helping to make solar power more affordable. Here's how it works. The ITC lets you deduct 30% of the total cost of your solar installation from your federal income tax. This applies to residential, commercial, and utility-scale solar projects. For example, if you spend $20,000 to install a solar panel system, you can claim $6,000 as a tax credit, reducing the amount you owe in federal taxes. The credit covers costs like solar panels, equipment such as inverters and batteries, installation labor, wiring and permitting fees. Let's break it down with an example. Suppose your federal income tax liability is $10,000 for the year, and you install a solar system costing $15,000. With the 30% ITC, you get a tax credit of $4,500, 30% of $15,000. This reduces your tax bill to $5,500. If your tax liability is less than the credit amount, you can carry over the unused credit to the next tax year, as long as the ITC is still in effect. The ITC is currently at 30% through 2032, thanks to recent federal extensions. It will step down to 26% in 2033 and 22% in 2034, and unless renewed, it will phase out for residential systems after that. The solar tax credit offers significant savings, but it's essential to understand some key points. Eligibility. The credit applies to systems installed on primary or secondary residences, and the solar system must be new, not used or previously installed. Ownership. You must own the system to claim the credit. If you lease the system or have a power purchase agreement, PPA, the credit goes to the leasing company, not you. Installation timeline. The system must be installed and operational during the tax year for which you're claiming the credit. The ITC can also be combined with other incentives, such as state rebates, utility credits, or solar renewable energy certificates, SRECs, further reducing the cost of going solar. Let's consider another scenario. Imagine a homeowner installs a $25,000 solar system and receives a $5,000 rebate from their state. The federal tax credit is calculated on the remaining $20,000, giving them a $6,000 credit. Combined with the state rebate, their total savings are $11,000, cutting the net cost of the system nearly in half.